Guys, welcome back to the Independent Investor Channel. My name is Ryan. In this video, we're going to cut right to the chase and we're going to talk right to our folks that are in their latter teens and they're getting interested in the stock market and investing for the first time. I'm so sick and tired of this topic being brushed under the table until seemingly folks get their footing under them or they get their careers started. Guys, we need to start to foster a lot more of an aggressive dialogue with our younger folks. They need to learn about the importance of empowering themselves and learning about critical avenues that exist within the new investing landscape, okay? Things have changed so much over the last 20 years, and especially over the last 10 years with the evolution of access to the stock market. It is so exciting for young investors to know and at least start to enter into the dialogue about what is possible out there with regard to savings, budgeting, financial stewardship, yes, investing. I'm sorry if I don't shy away from this topic, but it is amazing to me, especially how many adults I talk to who are financially illiterate, okay? But with regard to how many folks that are in their latter teens and they are hungry for this information, it's really, really interesting that I've got folks that are coming onto the channel now that are 16, 17, 18 years old that are excited about starting the self-education process about investing. In this video, you guys are going to hear my perspective. I've got 2 decades on you. I'm 41. I'm going to offer my perspective, having gone through these phases, starting investing at a very, very young age. I was interested in starting some of the fundamental pillars in my financial life when I was around 15 years old. I got my first job when I was around 13 years old. So I started to gain an income very, very early on in life. And the quicker you can kind of ask, now what do I do? How can I take this hard-earned money and start to make my money work for me? Now, if you're in your latter teens and you're tuning into this video, don't shut it off, all right? This can be a life-changing opportunity, and I'm going to try to wrap it up if I can within a 15-minute offering. Talking to my folks that are in their latter teens, this is the optimal age. You guys have the ace up your sleeve. The tragedy of that is that you don't know that you do, all right? And the ace up your sleeve is absolutely the time that you have with regard to that you can start participating in the stock market and take full advantage of playing that ace, because it's the best thing that you can possibly get going as soon as you possibly can. Number one is to explore your options. Get a hold of those good financial books. I leave those in the description of every video that I have. All right, there's lots of good ones. The Intelligent Investor is one of the best ones out there, but there's a lot. Think and Grow Rich can help to start to fine-tune your mind into thinking about yourself in terms of success. And the quicker you can get into the successful mindset, the more investing is going to make sense for you, where you're not opting to buy some luxurious items. You're going to think twice before you make those purchases and maybe opt to put that money toward a program that you've thought through, all right? But you absolutely want to open your mind to explore. I want you guys to realize that you don't know it all, okay? And I'll be the first to tell you at 41, I don't know it all either, all right? And you're going to have a lot of folks out there that by your exploration, you're going to come across, and they're going to want you to purchase courses. They're going to want you to send them money. They're going to want you to join monthly clubs and try to get you in the door, right? Promising financial success. I'm just going to make it really, really easy for you, all right? If you're not investing in yourself, don't do it. All right, and a lot of people are going to say, Ryan, you're wrong. Those courses are absolutely worth the money. I contend that a $1,200 course for somebody in their late teens is way too much money. You could take that money and put that money into such better use if you just learn some of the basic fundamentals of investing. And the basics that I talk about are easy. They're easy. Anybody can do it. Okay, you don't have to research this for a matter of time and come out with a degree that says you're now eligible to go ahead and enter into the stock market. It does not work that way. So I'm just trying to give you guys some fair expectations of what to expect through temptation, because there's a lot of prying on people that seemingly want to get that excitement geared in a direction that benefits them. If it doesn't benefit you, stay away from it. All right? Number 2, start to exercise some financial discipline. Okay? Financial discipline. It's a luxury to have one of these. All right? And all the power to those teenagers out there that seemingly believe that they are entitled to have this luxury item. Now, I'm not saying having a cell phone or a smartphone is a bad thing. I believe the contrary. Now, make sure that you've earned the right to have a smartphone, and having your Instagram account is not good enough for me. All right? Now, I don't mean to patronize, but what I am trying to do is set up some rules. Give yourself a fighting chance, guys. Average cell phone bill is around $150. Some pay double that. And it just blows my mind how you're giving away your ace. Okay, if you're a young person and you believe that you have to have this and you have to have a brand new nice car with all the expenditures that go along with it, insurance, gasoline, etc., those types of things, make sure that you're not shooting yourself in the foot a little bit and putting yourself on a setback track by opting for some of these luxury items, because this is not going to get you ahead. Okay. Just make sure that you're making smart financial decisions, and you can make smart financial decisions if in fact you're opting for this and you're opting for a vehicle. All right. But what you need when you're in this stage of your life is to start to think and grow rich. This is where you need to start these types of thought processes. And what I mean specifically is if you've got a side job and you're looking to go to college someday, you're in high school. Guys, I had a job through high school, okay? And I was making pretty good money. And it's all relative. If you're making a few $100s every couple weeks, wonderful. I'm not going to tell you that you can't put away $25 into a savings account and start to get that financial discipline as early as you can. Financial discipline, all right? Keep in mind, nowhere in this discussion will we be talking about stock or ETFs or index funds or all the fun stuff that exists on the back end. Because if you don't have this financial discipline, you're going to be lost anyway. It doesn't matter. It doesn't matter. You have to be prepared in your life to accept wealth. And for those people that step up and say, Ryan, I'm interested, I'm really interested, I want to learn, I'm all about helping you, okay? And you've got to get this financial discipline. Most people who are bestowed upon wealth and they are not prepared through financial discipline will end up losing that wealth over time, okay? So we got to get this discipline in place first. Number 3 is the educate piece. I've kind of talked about that. You can search out social media channels, and I'll take this opportunity. I know my own intention, and I know there's a lot of people who join my small community of just over 15,000 subscribers on YouTube. But I provide a phenomenal education platform free of charge. The only cost to you is your time. Now, if you don't relate with me, no problem. Search out some of my short list on YouTube of some of the financial creators and motivators and influencers that have taken this topic up for action. Number 1 on my list is Ryan Scribner. You can kick over. He does a great job of walking through fundamental investing and other business opportunities as well. Second on my list right now, who's really become kind of my favorite investing channel, is the Joe Carlson Show. Joe Carlson is one of my featured channels for a very good reason. Very, very easy to follow. Very, very in tune with the program that makes sense for him, and he advocates for that. And there's so much value in talking to thousands and thousands of individuals and making sure people understand that there's not one right answer. There's a lot of different programs in there. And through this education phase, you can really kind of find your niche, okay? Because no portfolio is going to end up the same. But if you've got this discipline in place and you're ready to set up this niche for yourself, all right, these few influencers on YouTube, myself included, can really help you get there and help bridge some of that gap to educate you on a topic that is really, really, it can be very, very overwhelming to start, and a lot of people get turned off by how overwhelming it is, and they never end up doing it anyway, okay? The style of investor that you're going to be, and I know if you watch some of the influencers that I just named, they're going to be talking about their specific investment style. But what I'm talking about is either one of two styles, either a passive or an active profile, okay? And I'm going to make this really easy for you. If you are 16 years old or older, or you're in your latter teens and you're tuning into this video and you're really, really interested, you should be, because it'll appeal to those folks that are a little bit more mature and have got their kind of priorities in line. But if you're hearing me out on this investment style, I want you guys to do me a favor and do whatever research you need on the prospects of becoming a passive investor. Learn about how Warren Buffett has done this over time. Learn about the prospects of becoming invested in the market, spending time in the market, and not trying to time the market, okay? You're going to succeed in the market much, much more frequently if you can justify becoming a passive investment style earlier on in your investment cycle, and then maybe taking up a little bit more of an active profile maybe later on in life while that passive base is working for you at all times, okay? So from an order of sequence, you want to enter into that passive style first, and then as you age and you start to enter into some of these commitments that you'll have, finding a career, going to college, those types of things, maybe you want to start a business, whatever you want, that passive style is working for you behind the scenes while you're focused on other things, all right? So the style, passive and active, with an emphasis on going passive first, all right? You need to kind of educate yourself up on the keys to investing. The skeleton keys to investing are as such, all right? Now, you guys know I don't script my videos, okay? So I've got these keys memorized. The keys to success in investing is understanding how you can take every advantage that you have and put it on your side, okay? Because the stock market is not a game. It's not a place that you need to play with. It's not one of those things to where you need to get misguided in your education phase or your exploration phase, where people are talking about penny stock, getting rich overnight, day trading. Those types of things are very, very tempting, and they are a complete waste of time, all right? The keys that I'm talking about are entering into a passive program, for example, but having done so after you've done a few preliminary foundational or structural buildings, keys to entering into the stock market. I talk about this in light of your investment fitness, okay? How fit are you to enter into the stock market? For example, do you have a savings account that would render you eligible to say, you know what, I've been able to successfully save up $2,500 in my young life. I want to take a small piece to that, and I believe that my fitness is strong enough to go ahead and take a piece of that, maybe 20%. You take that $500 and you allocate that, and you're starting to split those different buckets up in your life, and you start to identify these keys to investing. Now, once you take that and you've gone to it, I'm assuming that you don't have any debt, and I'm assuming that you've got a little bit of savings built up, okay? Those are the buffers or the foundations. Now, when we take that 500, we don't just blindly put it into the stock market, but what you need to understand is the keys for diversification You need to understand the key of dollar cost averaging, and you need to understand the key of tax protection and wealth preservation, okay? Those are about the most important keys to success in investing, okay? Now, the pillars to budgeting and financial stewardship and eliminating debt, those are the preliminary steps, but the keys to investing is understanding that once you take that $500 initial deposit in that, now what do I do with it? Do I just leave it and forget it? Of course not. You have to foster that account. You have to feed that account. You have to treat it like it's a pet, okay? Because the more attention that you give that along the lines of these keys, the more successful of an investor you are going to be long term. Am I injecting small amounts of cash? And I don't care if it's $10. Okay, $10 of an injection as soon as you can. Maybe you get some birthday money. Maybe you get some college money. Maybe you've got a side hustle. Maybe you take a side job where you get a little bit higher of a payment and you want to beef that up a little bit. Those are all an example of dollar cost averaging, okay? Diversification is the nature of entering into the stock market in a spread out manner, okay? Diversification is spreading your money across a ton of different assets, because when you're young, you're not going to be able to justify or may not have the capital to enter into so many different single stocks. That's why I mentioned the passive option first, okay? So once you get that diversification placed in that account, you're gonna be super set up from a strong baseline perspective to enjoy diversification over the course of your life. Diversification is something that you can gravitate to, grab onto, and enjoy for the rest of your life. It'll be something that will be with you in your account for the remainder of your life. Diversification, it's a key. It is an absolute key to wealth building, and so many people ignore this very fact, all right? Now, when you become eligible for tax protection through your exploration phase and your education phase, you should come across the prospects of employer-sponsored 401k programs, okay? You can read about those. And then, of course, the Roth IRA option. That's the optimal option as far as I'm concerned. That really should be your primary option to get those dollars put away and tax protected for your future, okay? And I know sometimes at 16, 17, 18 years old, it's hard to sit back and imagine yourself at 59, but you'll be there, okay? And for those folks that are able to forecast and say, you know what, at some point along the line, it's going to be a long way away, but the decisions that you'll make now will certainly set you up to have that wealth and that security down the line, okay? So the tax protection piece and the wealth preservation piece, those are the unique education aspects that I offer through my channel and talk about how important that is. It's not always about picking the perfect stock within that. It's about picking a good product that you can put in there and allow it to grow unobstructed. Allow it to grow free of fees. Now that's power, all right? That's a key to investing. Try to set up a goal, all right? Try to set up a goal. And there's been a lot of, I had a 16-year-old come in on the live stream, and it was awesome because they were able to declare to me a financial goal. And it can be very simple. It can be very broad in your young life to say, I just want to have financial security when I get older. I don't want to have to worry about money when I get older. I want to be able to do a little bit of traveling when I get older. All that stuff gets your mindset to say, okay, well, if I want those goals, I'm going to have to make some changes now. I'm going to have to start on this. I'm going to have to gain a little bit of discipline. I can't be stupid when I'm young and expect to make my goals. And there's a reason why we do this. We get you into that mindset of thinking now and growing rich into the future, okay? Very important to do some goal setting. Number 7, eventually through this process, you're gonna wanna act upon all the research and all the education and all the validation. You found your niche, you found your style. You know, you've watched guys on YouTube like myself and Scribner and Joe, and you've been able to kind of sit back and for free watch. These are real investors, okay? This is not monopoly money that we're playing with, and we offer this as a testimonial through YouTube to kind of say, here's an example of what we do. And through doing that, we're able to really streamline you up to this point where you're willing to act, and you've got all the tools in your tool bag to make an educated decision before you go ahead and act upon all this education that you've got here. I find it ironic how people are so scared to act upon this right here when it is so impactful to your future, but they'll act upon so many different other things, you know? Enter into depreciating assets, opting for this as a primary option. Guys, that's why I don't stray away from this discussion. I don't care if I'm talking to folks that are in their late teens. Guys, you have to hear this. You have to. It's not optional. And for those out there that are hearing this message, I congratulate you on taking the time to do just that. All right? Number 8 is to discuss. What I mean by this is if you have caretakers, parents, engage in this discussion. Insist upon letting them know where your passion lies. I do it with my parents. My parents aren't investors, okay? They're not. But they understand how passionate I am about it. So not to be secretive about my program, be open about it. Discuss it with them. Maybe you turn them on to the channel. Maybe you turn them on to the prospects of investing and growing wealth for themselves into the future, okay? The whole idea is to foster a dialogue of financial savvy and financial stewardship across folks that need this information. And I contend there are so many people out there that do not start the discussion early enough in their life. And this is why I put discuss on here as one of those things that you can do, whether it be with your friends or your family or folks that you trust, okay? You can start this discussion, and through the discussion, you're going to be amazed at how much more fulfilled you are as an investor, all right? This is an interesting one. This is your ability to learn how to separate from your money, okay? And I run people through the separation test all the time by asking them to pull out their wallet. And if all your money is in your wallet, you need to learn to separate, okay? I can guarantee I can go grab my wallet right now and I can open it up and there's no cash in there. There's no cash. Why is that? And a lot of people are going to be like, well, Ryan, you need cash in an emergency. No, you don't. Not in this society. You don't. I can pay with this, number one, and I just don't find a whole lot of value in cash. It's dirty. It's filthy. I end up spending it if it's in my wallet anyway. And quite frankly, my money is in my half a dozen buckets working for me. My money is working for me while I'm sleeping. My money is working for me while it's not taking up space in my wallet. I'm able to separate from my money. So many people have such a hard time with this. Taking their money, putting it into an institution where that money can make a rate of return. It can actually be working for you. And learning to separate from your money is one of those things that if you can kind of get in tune with the prospects of separating from your money, it's going to become a priority to pay those buckets first, as opposed to just living with the inflow and outflow of a particular job that you may have. Learning to separate from your money. Key takeaway. The 10th and final thing that I want to leave you guys with is to be open-minded. I find it interesting in my discussion with so many people about financial literacy, financial planning, financial stewardship, financial IQ, is that the folks that tend to fail more often than not, in my opinion, are folks that know it all. Not only do they know it all, but they're pointing fingers at other people doing certain things that are finding a little bit of niche of success in finances and always want to be critical. My thing is, if it's working, leave it alone. There are an infinite amount of ways to succeed in the stock market. People can succeed in finances without buying one single stock their entire life. I know savers out there that are millionaires that you would never know that they're millionaires, but they are. Why? Because they've learned these lessons early on in life, and they got that financial stewardship, and they deployed it, and they put it to work, and they fostered it over the course of their life. All right, and it's made all the difference because they were not afraid of making these decisions early on in life. Guys, thank you so much for tuning in to this core investing video. For those folks in their latter teens, 16, 15, 16, 17, we need to start the discussion early. We need to get this information in the hands of our young folks so they can start to make some informed decisions based on the products and the accounts that are available out there. We need to have them up to speed so when they are in fact ready to act upon this program, they are acting out of an informed process and they've educated themselves up and they can start themselves on the road to financial discipline over the course of their life, setting themselves up for financial security down the line. Guys, thank you so much. You hit the subscribe button, man, if you're new to the channel. Help us support this movement and community of folks, of self-directed investors, empowered investors that are looking to take care of themselves first. All right, they're looking to empower their own programs, and it is so possible now, guys, so possible. If you appreciated the message, don't forget to leave your comments at the bottom of the video. Hit the thumbs up to help us support the channel and the mission that we've got putting through on YouTube and the Independent Investor channel. Thank you so much for tuning into the video, and good luck in your investment future.